Everyone knows the housing market is wacky right now. Mortgage rates are very high, yet prices remain at record levels. The market is experiencing fluctuations, but is showing no signs of crashing or dipping in any significant way whatsoever. In April, sales fell for the second straight month. This was a surprise to most analysts, but prices overall are still climbing. The combination of low inventory and high rates is causing a lot of buyers to continue to sit on the sidelines. The bottom line is that it's an awful time to be a buyer. The average rate on a 30-year fix right now is around 7%. In addition to this, home insurance costs have surged 35% since the pandemic, and in some areas of California and Florida, they have doubled. Most people thought and hoped that rates would go down this year, but that hasn't been the case. Of course, the market is extremely localized. Places like Florida and Texas are seeing big surges in inventory. One trend that we are seeing is that some of the hottest markets are now the first ones to see prices drop and inventories rise. One truth that is setting into the market for many buyers and sellers is that rates will likely stay higher for longer. Two sayings that you'll constantly hear realtors tell you is survive until 25 or marry the house and date the rate. But with inflation staying stubbornly high, a lot of people are rethinking this strategy and accepting the fact that rates may stay higher for longer. The big question in real estate right now is what will it take for the market to finally start turning negative? After all, affordability is at a near all-time low, and the one thing that is not often talked about is how high home insurance rates have gotten. This is exacerbating the home affordability crisis that we're already seeing. The main thing that most analysts agree on is that the one thing that can change the market is lower interest rates. Lower rates will cause more sellers to enter the market, which can take us back to a more normal cycle. However, if rates drop too quickly, all the inventory gains may be wiped out by strong demand. The bottom line is that demand right now is really high and inventory is very low. With this combination, prices will stay stubbornly high despite the cost of living crisis. There are two big reasons the housing market is not showing any signs of going down. Number one, millennials are in their prime home buying years, and they are the biggest population segment in America. The second biggest population segment are the boomers, and they're sitting on nearly $80 trillion of wealth, and they're doing a lot of YOLO buying, and they're also spending a lot of money to help their millennial kids get homes. The brutal truth is that it's an awful time to buy a house, and it doesn't look like that's going to change anytime soon unless we have a really bad recession. For the time being, that's extremely unlikely, but after the election, anything is possible. If you liked my video, please push the like button, and I wish you a great day. Thank you.